Hello and welcome to another short video from Elvyn Capital Credit Guide series focusing on banking and finance issues that CFOs and treasury managers may find helpful. This series is devoted to credit agreements. This video and this whole series is brought to you by Elvyn Capital, your corporate finance advisor. Today, we will take a look at the basics of primary loan syndication, why and in what situations it might be a good idea to consider it, and what are its main upsides and drawbacks. A good way to take a look at a syndicated facility is to contrast it with a bilateral facility. In the case of a bilateral facility, the borrower enters into a credit agreement with a single lender. The borrower may discuss the terms of the loan agreement with multiple potential lenders and even collect proposals from multiple lenders, but the borrower as well as the lenders know that at the end of the day, the credit agreement will be entered into with one lender only. Often, the borrower either wants to diversify its banking relations or the amount of financing that it requires exceeds regulatory, group, or internal lending limits on group or industry exposure. In these situations, the borrower may decide to have separate bilateral credit agreements with each lender. This might be a viable solution, but it usually is a temporary one, as the management of inconsistencies between the separate credit agreements, reporting duties, collateral allocation and cross-default management tend to be difficult and tends to spiral out of control as the business and its financing needs grow. This is why businesses, after reaching certain level of magnitude and complexity of their business, prefer to have their credit arrangements with multiple lenders to be put under one credit agreement under one uniform set of rules and communicate with a single lender, acting as agent of the rest of the lenders. The process of putting this group or syndicate of lenders together is referred to as syndication. Based on the capability of its treasury department and its knowledge of the relevant market, the borrower may choose to arrange the syndication by itself, so-called self-arranged syndication, or it may decide to appoint a professional, often an investment bank, to arrange the syndication on its behalf. The upside of the self-arranged syndication resides in saving the fees charged by the arranger and retaining control over the syndication process. On the other hand, the benefit of a professional arranger is that it would typically have very well-developed net of relationships across the market and will be able to attract large number of investors, not only among banks, but also funds, which may be indispensable in cases when the financing is structured in a way that requires tranches with bullet repayments, long tenors, or with junior collateral ranking. The arranger will also take professional care of matters such as information memorandum and will typically also advise the borrower on the structuring of the financing. The fact that a reputable arranger is in charge of the syndication process may serve as a positive signal to potential investors and raise their appetite for the deal, especially if such arranger is willing to retain part of the exposure. Second key decision to be made by the borrower is whether the syndication will be fully underwritten by the arrangers, meaning that if the arrangers fail to allocate the whole ticket on the market, they will be obliged to commit to provide the whole facility by themselves at a pre-agreed pricing. Or whether the syndication will be partially underwritten, meaning that if the arrangers fail to achieve full allocation of the deal on the market, they will be under legal obligation to subscribe the remaining part of the ticket under pre-agreed pricing by themselves up to a pre-agreed amount. Or lastly, if the syndication will be structured as a best effort syndication, meaning that the arrangers will be acting in good faith to find the investors for the deal, but if they fail, they will be under no legal obligation to take part in the financing themselves. The borrower's decision will depend on how urgently the borrower needs the syndication to be successful, in other words, how urgently he needs the funds, and whether it is willing to pay premium for the commitment of the arrangers to commit to subscribe the deal themselves in case the syndication fails. Now let's take a brief look at the basic steps in the syndication process. In the case the borrower decides to appoint a professional arranger, the borrower approaches one or several arrangers and requests their proposals. Based on these proposals, the borrower chooses one or more arrangers. The appointment of the arranger is usually documented by a mandate letter, and the arranger so appointed is referred to as a mandated arranger. Based on the complexity of the deal, the mandated arrangers may be allowed to appoint further sub-arrangers. In this case, the arranger primarily contracted by the borrower is referred to as a mandated lead arranger, or MLA for short, and the sub-arrangers are referred to as mandated arrangers. Mandate letter deals with a number of issues, including prohibition of front-running, confidentiality and non-disclosure matters, but one of the issues dealt with in the mandate letter that deserves further exploration is market flex mechanism. This is a mandate letter provision that allows the arrangers to change certain specific parameters of the deal, especially increase its pricing, in order to achieve successful syndication. This is a touchy subject, as the ability of the arrangers to increase pricing or tighten covenants plays a major role not only in the ability of the arrangers to place the loan on the market and achieve successful syndication and collect success fee, but also to avoid being forced to subscribe a higher portion of the loan that they would be willing to in case of partially or fully underwritten syndication. In addition, it may also have direct impact on their profitability from interest and fees in case they themselves, through their lending departments, will be participating in the financing. This is why the market flex provision of the mandate letter is usually very heavily debated and requires special attention of the borrower. At Elvyn Capital, we make sure that your financing is structured and implemented professionally and with the best terms available on the market, assisting you throughout the whole financing process, from its structuring through lender selection, coordination of the whole process until successful drawdown. Hope you enjoyed today's video, and we'll be looking forward to seeing you at the next one.